All right, so the webinar is being recorded. Welcome, everyone. Thanks for taking your time. Let's hope we're all going to learn something. All right, so before I get into it, can everyone see the whiteboard? Can everyone see? I just made a line, whatever. Can everyone see that? Please type it out if you can so we get into it. All right, everyone's saying yes, so let's get into it. So talking about the market cycle, we all know that market opens Australia, Asian session, then we get into London session, and then at last it's the New York session, right? So what we're gonna talk about is how to trade these different sessions. And it works on every time frame, but I know most of us are impatient, so we're gonna take a look at the 15-minute chart so you can trade within the day and get out with profits, right? So a typical market session, let's say this is one wave, right? Just for an example. So you would have consolidations here, consolidations up here, and consolidations up here. And that's how market usually moves. It cannot just keep going up or keep going down. Like if it's an uptrend, yeah, the buyers are gonna keep going up, but sellers have to take their turn for them to continue. And for all you pattern traders, this is where you usually have your W's, and this is where you usually have your M's. And if we have any consolidations here, we might usually have a range, a channel, a flag, a wedge, whatever you guys like to call it. All my students are aware of how to trade the flag or the wedge. I just call it a wedge. Keep things simple. Now, I personally do not trade these M's or W's, and we'll go through it quickly and I'll show you why I don't really need to look at them. But for all you pattern traders, this is how it usually is. This is like the most basic version how I can put it. Now, let's get to the charts and look into it deeply. All right. If everyone can type it out once more, if everyone can see my screen. Can everyone see the screen? All right, everyone's saying yes. Okay, now, so we're on pound yen on 15-minute. So we're gonna do this on 15-minute. Again, it works on every time frame, but it all depends on you and your understanding of different time frames. It would be best if you start from a higher time frame, you draw your support and resistance, and then do this. It makes more sense. Now, what I have here is these are just the day separators. Whenever a new day opens, that's just a default in MT4. I personally only use day separators. I don't really use these session indicator, but just to make it better for everyone else, I just put these on. So what these three rectangles, let's call it, what they're showing basically is this thing is the Asian session. Now this in the middle here is the London session. And this here is the New York session, right? Now, before we move into this deeply, now, everyone is aware how to figure out the highs and lows from one day, right? Like we can clearly see here, this zone up here was the high of the day, and this zone here is the low of the day, because a day started here, ended here. So this is the high and this is the low. Everyone's aware of that, right? Yep. All right. So now that's one thing. So before I get into it, let me ask you guys this. I'm sure everyone's heard of London sessions the best, trade London session, this, that. Can anyone tell me why? Can anyone tell me why people care so much about the London session? And we see all these people on YouTube and stuff advertising that London daybreak strategy, this, that. All right, so Lowe's saying because the bank And Sebastian saying volatility. Sheldon saying orders are packed in. Okay, so now, why London session is the best? If we trade according to the market cycle, let's say you were on the daily chart, you drew your support and resistance, you figure out the overall direction. Now, it's not like, let's say, let's just go on the daily for a sec. Let's say we're on the daily and we see from here till here, market's clearly going up. So it's in an uptrend. We see all these wicks, or if I highlight, let's say this area, this might look like a lot of move going down or consolidation and whatnot before the candle actually closes, right? Let's see, if you take in consideration the high and low of that day, that's a difference about 103 pips. So all that stuff happens, which is why if let's say you start from daily, you have your support and resistance, you know what's the overall direction, or let's say on the daily you would like to sell in this area. So you just have it marked out, and then from smaller time frames you can trade in that direction. Don't just blindly follow when everyone says, oh, analyze on the higher time frame and go down and take entries on the smaller time frame. Well, you're either going to end up missing the trade, or you're going to end up taking a trade that's going to result in a lot of heat. You'll be in drawdown forever, and then you'll get out with a loss, and that just to find out it goes in your direction. So when experienced traders say that analyze on the higher time frame and find entry on the smaller time frame, that doesn't blindly mean that, let's say on daily you wanted to buy here, right? Now it's at that level. So if you go below time frame to the lower time frames, you might end up missing this trade. So once you're at a point where you know you should be taking that trade, you just go ahead and pull the trigger. In that sense, there's no point going to smaller time frames. But let's say, just for discussion, we're waiting to sell in this area, and the price is right here at the moment. So we know overall we're expecting it to go to this area, right? Now you can go to smaller time frames and trade in that direction accordingly. So that's what's meant by analyzing on the higher time frame and going to lowers. Okay, so now that we have that understood, and I'm going to assume everybody knows how to draw their support and resistance and stuff like that on higher time frame. So let's go to 15-minute, and let's say we're here. Okay, so that's the high, that's the low. Now, this area here is the Asian session. Most of the time in Asian session, you can get an idea what the London session is going to be like. But taking a trade in the Asian session, I personally don't recommend, because London session is going to decide the direction of the market for the following day. Because Asian session is just the start of the day. So usually consolidations, people place their orders, stuff like that. Then London session, why it's more important, because it gives you direction of the market for the next day, right? So we can see the day opened, this was the high. Now, we can see from here, the last level breached or broken was around here. So all the people that know how to gauge momentum, they would have gauged the momentum with the buyers, and they would have seen that this was basically the last run buyers were making, and they could have easily sold up here. And notice that this falls under the London session. But all you pattern traders here, look at this. From this Asian session, this was the high, but I don't personally recommend taking trades in the Asian session. But see, once the London session opens, it goes up to challenge that high, right? If I draw a line out, see, it challenged it once. It went up again to challenge it the second time. Now, if you're a pattern trader, what do you have here? What do you have here? Come on, where's the pattern traders? What do we have here? Well, in terms of pattern, there we go. Roscoe's saying M. That's what happens. See, if you're not a pattern trader, you don't have to worry about it, because you would have seen it simply by gauging momentum, and you would have sold it easily here. But if you are a pattern trader, you can see this M here, and from here you would sell it to complete the second leg of this M. Now, where to take profit, that depends on your bigger time frame analysis, because that's when you'll be able to know what level to see. And look at this. I have this horizontal line drawn here from daily, because that's a major support and resistance there. And look at this. If we sold up here, that was a straight profit of 147 pips. It touched that line and then it did what it had to do, right? Now see, we have the high up here and low up here again. Now, on London session, low happens now again. I personally would be gauging momentum at this point. Once the sellers die, I would have hit the buys. But for all the pattern traders, again, if I put it that way, you took this M trade here when you entered in the London session because that was simply a stop loss hunt. You come down here, this happened. Now, what do most of the retail traders do? Once it comes here, it does its thing, and let's say the price is up here. Now this is New York session. Price is up here, right? What most of them are doing is they are selling right here. I'm sorry, they're buying right here. Because most of the retail traders, they like to chase the markets. They chase the price. They do not wait for the price to come to them. But you're going to be aware because, you know, during London session, this was the low that was made. And that is also the low for your day. Because look at this. They started here. And it's going to end here, right? So you know that was your high and you easily sold that. Because if you're a pattern trader, you saw this M. If you're not a pattern trader, then it would have been actually easier to just gauge momentum. You would have got the entry on this first red candle here. But now it comes and makes the low. Now during New York session, let's say all this is happening, but you already took the sell, and let's say you're out. Now, one thing you got to keep in mind, during New York session, the direction of the market is not decided. That is usually decided during the London session. So you know, once, twice. So let's say, if you think of this as a W, I'm going to mention this again. I personally do not trade patterns. I would have simply gauged momentum and bought it here at this wick because I can see that. But even if you're a pattern trader, what do we have here? What pattern do we have here? All right, Sebastian Roscoe is saying W. Now, you might wonder, if you start from here, and let's say you're looking at this as a W, you would have bought here. And then it only went up this much, right? Because that's a W. Or if you started from here, that's a W. So see, this is the one thing why I'm not a fan of patterns, because it can be confusing. But if you go according to this high and low of the day again, and look at this. This was the low of the previous day. Well, that horizontal line, that's actually drawn. But if I actually extend the low of the day and I put a line here, can everybody see that line? There's like, I don't know how to change the colors on this indicator, but can everyone see this line, this one? So you see, if I draw that, you sold up here, you took profit down here. That was based on your support and resistance. But this zone also happens to be your low of previous day. So they're feeding off of the previous day. So that gives you another reason to buy here, right? Now, again, so New York session's done, overall the market was bullish and you got out in this zone. Now, so how the cycle works now, we're in the Asian session again. Now it's going to be consolidations, people are going to get trapped, and that's when we continue. So we see this is the low of the previous day. Asian session opens, it tries to go up, comes down, and whatnot. But see, right when it opens, it comes down, still challenging the low for the previous day. Look at this. But we don't take trades during Asian session because we want to see, because you're going to have a stop loss hunt like 95% of the times in London session. And look at that, what happens. Once we go into the London session, it tries to pull down, right? It tries to pull down. And what that does is, whoever bought up here, where do you think their stop loss would have been? Just below the previous wick, right? Up there, or here. And look at that. All those people are taken out during London session. That wick just wicked out a little bit. All those people have been taken out. And that's when you hit the buys. And that's 113 pips just during London session. So this was based on the low of the previous day. So this is why highs and lows of every day are important. And that's how you navigate through different sessions. So you see here, we had the high of the day, and then we had this M for the pattern traders, but I personally prefer just gauging momentum and then hitting buy or sell. So you sell up here, and then just to be sure of where you should take profit, support and resistance, previous low, or whichever other method you have, however you like to trade. Now that was that. So the next day starts. Now we're low here. Now see, this gets in the concept of more of a macro and micro thing in the charts. But just to simplify it, the move started from here, right? So this one, and then it came up until this point, and two, then this. So what pattern would you call this? Can everybody see this big W here? This is for the pattern traders. You can see this big W here, right? So you would have seen it coming from far that during London session, there has to be a stop loss hunt. Because all these areas at the bottom, these are all buys. Yep, Sheldon saying multi-session W. Well, I don't want to go deep into patterns. I don't trade them, but I'm trying to simplify it. So we can all see this big, either macro or, as Sheldon's saying, multi-session W. So you have this. So all these micro W's in there, that's simply areas to buy for you. But you have to give that time to the London session to do its thing. Because during London session, either what if this just broke to the downside, and then you're trapped because you're thinking, oh, it had to be a W and it had to go up. But you see, during New York, it couldn't break it. During Asian session, it bounced off it. And then during London, once it didn't break and the stops were taken out, that's when you hit the buys. And that's when you get this smooth move of 112 pips. Because you have to pay attention to these things. They came to that level. Okay, you had this micro W here. Fine, you bought it and you took this profit because there's some SNR in this zone. So you would have taken that profit easily. And that was not a bad scalp. That's about 50 pips. But again, we have to pay attention to the cycle because that's what happened. During the Asian session, you usually have consolidations. And then during London, you see it pushed down. Now, it could have broken. If it broke to the downside, then most likely you'll be bullish for the rest of the day. But it didn't. And that's when you hit the buys. Your first target, SNR, second target, the previous high, or depending on your analysis from the bigger time frame. Is that making sense to everyone? Any questions so far? Guys, let's hear it. Any questions, or is that making sense to everyone? I'm going to clear the mess. Any questions before we move on? Can everyone still hear me? All right, awesome. Let's keep going. So now see, then we transition into the next day. Again, Asian session, consolidation. Now, all my students can totally see a flag here, and anyone who studied the market cycle, I'm sure they can see this flag over here too, and then it breaks down to the bottom. And the previous level that was broken, when this move just bounced up, it was here, and this was the low of that move. A lot of people call this a block. I just like to call it a breach. All my students know what I mean by that, but I'm sure a lot of people just call it a block. I've heard that term a lot of times. So block, breach, whatever you like to call. So it happened here, and then you have this high, right? Now, we have this high of the day. Let's extend it out so we know what's happening. Now, see, London session opens, it goes up here. What's that for you? That's an area to sell, because that's not being able to break that, right? So you could have sold here, a quick little scalp, you take profit at here, at the previous level that was broken. 48 pips, easy. It goes up again. But see, for the whole day, it simply has been consolidating just between up and down, up and down. It even came to test this area, but it never really went past it. So this whole day was simply a consolidation where you could have easily taken these scalps, 50 pips going down, and again, now look at this. For you pattern traders here, what do we have here? You go up here, it's testing the same zone, so you already know it's a sell zone. But what do we have here? Isn't that an M formation for all you pattern traders there? So at the second leg, as usually M traders do, you sell at the second leg, and that's another scalp coming down of 60 pips. So you see, this is how you transition through the session. Asian session, if you're smart, you would stay away from putting any order, because it's going to give you an idea of what's going to happen in the London session. So now, again, so we have this low of the day, this high of the day. So let's just extend it out, and let's see what's happening the next day. And this was the low. This is happening again. Now, Asian session, it's trying to go towards this high zone again, but it couldn't reach that zone. It tried twice, it couldn't get to the high. Now, Asian session again, consolidation, right? And for the true pattern traders, you can see this either a little channel, or if you're transitioning from the previous day, you can see this flag from this low, and you can see this flag over here, or wedge, or triangle, whatever you like to call it. You would have seen this coming from far away, and you could have even gotten a better entry, because see, during Asian session, it comes up to this high. Now, you know, okay, during Asian session, it came to this high, but it's still below the previous day's high. So you know it's not really getting to that level. So it's being rejected at the top. London session opens. It goes up. Test that area again. Look at this, because this is the high for this day now, because it hasn't been broken. If it was broken during the London session, you'll most likely be going to the bull, like would be bullish for the rest of the day. It works 98% of the time. London session decides the direction. Now, so we have this high during London session. It comes up here, but it couldn't break it. But that's fine. We don't have to wait for that. What do you see here? Isn't that a little M between the two sessions? So couldn't you sell this here and take profits at the bottom of, if you're respecting this flag, and you could take this 25 pip scalp? But let's say your perspective is different and you're looking at it as a bigger level. So let's say you look at this move and then this move, you miss this and you're looking at this flag, but it tried to break out of it during London once, comes second time, Can you say that that's simply a stop loss? But see, that wick goes up, but it fails again, and it fails again. And let's say you were looking at it as a bigger level. So do you see this big M for all the pattern traders? And would you not be able to hit the cells here then? Well, yeah, another thing. If you're not good with marking your levels and seeing those, like people call it blocks, I call it breach, whatever. If you're not good with that, yeah, definitely incorporate fibs when you're doing this. Like, watch the video on fibs that we've done earlier. Incorporate that with this. You're rarely gonna take a losing trade. And you see this entry over here. If you're not good with your trend lines and you're simply joining the dots, look at this. If I simply, where is that? Here. If I simply join the dots here, it never really came there. I would have missed this trade easily. So you have to be good with your trend lines. If you use this, I usually don't really use fibs or patterns, but I see all this a different way. But if you're a pattern trader, you can see this. It comes, test that the second time, stop loss sign. You clearly see it's not breaking it. You hit the cells again. And the New York session for the rest of the day, what do we have? We're bullish for the rest of the day. And that's when we have 87 pips here. So that's how you trade between the sessions. Now, if we clear all of this, now look at this. Everybody saw this huge jump last night, right? Everybody saw this huge jump last night during London session, 200 pip jump on GJ, right? Within a couple hours. Now look at this. If you mark the previous day's low, which is this, well, this is a bit of a faker. I assume all of you know how to spot that, so it would be up here. Now, Asian session opens, consolidation. Now London opens. Now see, but during Asian session, the low of the previous day was already tested once. Now, during London session, it came down. It's being tested again, right? Now, if we were simply gauging momentum of the sellers, we would have already seen it dying and we would have hit the buys up here, over here, over here. Now that, everybody that knows how to gauge momentum and my students, they for sure know how they would have hit the buys here. But if you're simply a pattern trader, you've marked the low of the previous day. That's that. You've seen during Asian session, it has been tested once. But you don't just want to assume that, okay, it's not being broken. You want to wait for that stop loss hunt or for that confirmation that it's not going to be broken during London session 2. Then you see this. It whipped past it and it wasn't broken. So that tells you that, okay, it's not being broken, so it wants to go up. Now, let's say you need one more confirmation. So what do you have here? Now, what pattern are you forming here? So what's another thing, if you're a pattern trader, that's going to tell you that you should be buying here? What do we have forming here? Come on, can anyone tell me? What do we have here? No one? Don't we have this W forming here? So you see, at the second leg, you're hitting the buys, and you could have easily taken these 200 pips last night home. If you simply pay attention to these different day sessions, I usually don't have these on charts. Like I can see it now with practice, but if any of you need this, I guess Lo has it. I'm sure he can send it in the group. So if any of you need these day separators, ask Lo to send it to you guys. So that's the easiest way I can put it, how you can trade different sessions. And this is simply I'm doing on 15-minute chart. So you can be in and out within the day, no swap fees, nothing, and you can take the trade and be done with. Now, look at this. What's being formed here? Now, simply for the pattern traders, they would have hit buys here, and they would be looking to take profit in this zone. That would be their first target if they're simply going based on this. That's still 73 pips. Sheldon, correct me if I'm wrong, because you're the pattern trader. But even if you're not a pattern trader, you can see this clearly because we have SNR there, and you can see it bouncing off, and it's also bouncing off of a high of a previous day, which has been broken. Look at that. It just lines up with the SNR, and hence we would have hit the buys easily again. Now this is the seller's last run. This is the last little bit of run, and that's after this we're going up here to complete this W for you pattern traders. For us, it's simply a last run, and then we're going to go to this level for sure, and then we'll see how it turns out during the next Asian session. So guys, we have 3 minutes left in the meeting, so do we need to start another one? Any questions, or is everything clear? So that's how we trade. Sheldon's saying fire. Okay, so I should be a pattern trader now. No. All right, guys, any questions? We have 3 minutes to go, so any questions? Come on, let's hear it. This is UJ, look at this. So now, in this case, it was testing the high of the previous day. Look at this. Let's just do one quick example. We have 2 minutes left. So see, on UJ, this was the previous day's high. Asian session, it was tested once. London session, or Asian, like this is intra-session basically. This is basically the intra-session, right? It tested it, and then you have this M forming. You could have clearly sold it here, but again, marking your levels is really important because you would have to know where to take profit. So if you sold up here, you could have quickly taken this scalp of 21 pips. Now that's one thing. But you see why I keep saying London session is important, because they came up again and they broke it. Now, once they've broken it, don't chase the market. Don't be buying up here. No, that's not good. Don't go and buy up here, because if you simply extend that, let's say you're just on 15 minute, if you simply extend that, and then you're just blindly thinking, let's say you're a pattern trader and you're like, oh, it came up and went down again. It's maybe an M. Before, in this case, would have been a beautiful trade. But before you hit that sell, make sure that level's actually going to line up somewhere. Even if you're simply on the 15-minute chart, let's see if it's going to line up somewhere. It would have been better just go to a different time frame, I guess. Wow, no, that's too far. That's too much data. But whatever. It broke. That was the high made there. It came once, failed, came twice, and that's when you had this M for the pattern traders. We would have simply gauged momentum. 1, 2, 3, 4, last run. Oh yeah, this was easily a sell for non-pattern traders too. This was an easy sell. And if I sold personally this one, well, I actually did. Yeah, I did. So your first target would have been this SNR, but it pushed down. Why? Because of this. Simply a stop loss hunt for all the buyers. I'm sorry. Yeah, the previous buyers. And then it's going to go in their direction. Does that make sense, everyone? So the meeting's about to end. I hope it was useful for everyone. If any questions, please, or we can discuss it in the group if there's any questions. The meeting's about to end. All right, thanks, guys. I hope this was helpful to everyone, and I'll see you all in the group.